Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings and welcome to Macro to Micro Options Power Hour. I'm Samantha LeDuc, founder of LeDucTrading.com, joined by Hans Albrecht. We are coming to you from bi-coastal here, West Coast, East Coast. I'm on the East. We got some nice, beautiful day, finally, and neither of our favorite teams are in the Stanley playoffs. So we're going to move forward and we're going to basically talk about NVIDIA because they will announce earnings in 20 minutes. We're doing this live, but we also have lots of other things to talk about: macro, micro, option structure, and then of course just getting this report out of the way, and of course month end, and then as we move forward into June and summer trading. So lots to talk about. This is Ask Us Anything as well, so you can pop up in Zoom Q&A or chat and hit us up with questions. Greetings, William. And we also do have a headline that just came out for those who are joining us live, that basically Trump said he does not want any chip manufacturer to sell to China. Now, obviously that is meant for NVIDIA. They have earnings today. It's not a coincidence. There are no coincidences when it comes to market and Trump. Anyway, so long story short, we're waiting for this kind of reaction, and the sentiment is, of course, bullish right now. Nuclear, AI, semis, space, drones, quantum, Bitcoin, crypto, treasury, stablecoin companies. Anyway, the point is we still have bulls charging from that April 7th bottom, and everyone wants to know, okay, where does it stop? What are the macro triggers to introduce some risk into the market? So long story short, we are live because we're eager, just like you, and because it's Wednesday and we always do this. So Hans, I did a write-up earlier today in regards to NVIDIA to help clients prepare on the short duration. I'm going to bring this up and then you can, I know you've got a semi fixation right now. Let's put it that way. But let me share a few charts right now, which is to say
semi-fetish. I got a semi-fetish. Right,
I don't think that's any better. We've got a 1-day expected move of 7.4% for NVIDIA. This is earnings. This is how we've done in the past, but also note this was a really big outlier event, and that kind of skews a lot of data back here in May of 2023 when everything changed. And then they hit it again out of the park in February, and etc. So the point is they're overestimating the reach, but that does make for nice premium selling for those who are so brave, because that 7.4% expected move on the earnings is now going to have a little bit more energy now that we've got Trump coming out and warning. So anyway, this is the straddle price. It's also pricing in, let's see, what did I write here? It's from Lawrence McMillan, by the way, the option god. He wrote a fabulous tome of option knowledge many years ago. I'm going to say probably 25. I don't know. It's at least 20.
It's the original. It's the options Bible, if I may.
And I honestly still recommend it highly. And also he's still engaged with the markets, which I totally love. So anyway, long story short, he has projected that the current quarter is the first time since those straddles back in February 2023 and May 2023, both times they were outsized, right? 16 and 24% respectively. Anyway, it's the first quarter since that straddle has cost so little. And in a nutshell, option market is probably overestimating the size of this expected move. And that doesn't make it bearish, but it does provide some good option selling on this play. So last but not least, on the NVIDIA front, we also have Scott Murray of Smashing Volatility. I'm also a fan. Dealers were sellers. On the last report, they were selling calls, and whether to overrate or take profits before and after. So calls being sold means dealers off the hook and they can sell the underlying. So that was one of the reasons why we also went lower in NVIDIA post earnings last report. We'll see if we have a repeat of that in a few minutes because they're going to report pretty soon. All right, so what's your take on semis in general and then big picture? I'm not in it. I already mentioned 96 to 136. We've been updating that every single bloody week, and it hit last week. There's just no interest for me until after earnings have played out, and basically I'm still waiting to see if we're going to have a big reaction to that report, but I'm not expecting one. So there you go.
Yeah, I almost wonder if there's just almost lack of interest in NVIDIA in a way. Not that there's lack of interest. It's still 12% of daily option volumes. But last year, we probably saw NVIDIA volumes like 30 to 40% of daily daily sort of option trade. So it was really it was the thing. And we've seen this kind of denouement over the last 7 or 8 or 9 months where there's been all this back and forth. Is CapEx coming down? No, it's not. Everyone says it's not, but everyone's still skeptical. It's almost that's the most skeptical thing out there, even though everyone keeps saying, oh, we keep spending like gangbusters. So there's been this almost, and maybe a broadening out that we saw start to begin last August, September, where other sectors started to do okay and the market started to broaden out. And maybe that takes some of the luster off the AI, the Mag 7 that had done well for a good year and a half. And so here we are with one of the lowest straddles, pricing one of the lowest straddles. And what's interesting actually is, so we've got a relatively low straddle, 6.5%. It's lower, it's not insignificant. And the thing is, sometimes the straddles are very low because people just don't think anything's going to happen. And that sounds like Captain Obvious speaking. Maybe nothing is going to happen. Sometimes there's truth in what's being priced in there. And we've had this very nice 50% bounce off that 90 level. We're maybe 10% from the highs. We're closer. We're pricing in a lot of good stuff at this point, even though I think a lot of hedge funds have really gotten out of mag. I'll show you some positioning in a moment, but nobody's really in this market yet. And I keep saying this and we keep bouncing back. And I think that's really a part of it. We had a couple of tape bombs last week. And then of course, that was the biggest flinch and flip I've ever seen from Trump. Bless him. He is definitely predictable in a way. His flinches are V's, just like the market. They're V flinches now. He doesn't even wait. And then suddenly it was, okay, we'll give the Europeans another month to think about things. So there's a turnaround in his kind of game, very quick turnarounds as well. And so here we are back again, really not that far from all-time highs. We can see this NVIDIA skew here. So when we talk skew, folks, it's basically a lot of people talk about volatility. Where's pricing? Where are they pricing this and that? What's the straddle worth? The straddle last I looked is about $9.15, which is probably around your percentage there move that you mentioned, Samantha. So $9. So that means if you're long the straddle on NVIDIA that expires in 2 days, you got to have the thing move $9 or you're not going to make money on the thing. You're not going to make money. Now you may not, if it moves $5, you're not going to lose all your money. But so the market was looking for about a $9 move. But if you look at skew, so as I was starting to say, that pricing that everybody looks at, sometimes it incorporates skew, which means what are the out of the money puts doing? What are the out of the money calls doing? It all goes into the same sort of cauldron in this recipe. You can see it's very flat. So not only is the straddle very low, but at the same time, what I would consider skew is that added excitement, right? So the sort of baseline level of option pricing that you hear about, that's okay. You're going to go to the blackjack table. The skew is where people are like, okay, I'm going to do this crazy bet at the craps table. I'm going for this 30-to-1 kind of trade. When skew is really steep, people are really trading excitement. And you're just not seeing that excitement in the skew. And so we're going to have
all kinds of good reasons too.
Yeah.
Trump doesn't make it a smooth pass. He definitely takes great offense, by the way, to being labeled Taco Man. I don't know if anyone caught that press conference today, but he really took offense. He said that was a nasty comment, a nasty question.
Did he?
But yes, he really. So anyway, tariffs are coming harder, bigger very soon, just for him to prove his manlyhood. Anyway.
I like tacos, and I know he likes tacos, so it's not that bad.
It's not about that. But okay, so long story short, we don't have a lot of excitement built in. There isn't a really big reward for the risk, which is another reason why I'm fine waiting until after earnings. And then we'll see the guidance, how profit margin is doing. They have been sequentially coming down. We know sales to China have backdoor through Malaysia. It has been very strong, which is one of the reasons, Singapore and Malaysia, which is one of the reasons I wrote that piece that Trump is trying to punish NVIDIA like a few months ago. Right? Like a few months ago, right after earnings, in fact, he did the same type of thing. He escalated the rhetoric around being tough on sanctions for chip sales into China. So he's doing it again as a warning shot across the bow. There's no coincidence. Anyway, that's why there's no excitement, is because it's not so easy to play this on the upside or downside because they are still the golden child of the AI ecosystem. And then on top of that, if I can just show this real quick, share this.
Yep.
Thank you. Yeah, and they're coming out in a few minutes, but I had mentioned a few days ago, last week at some point when I did my this is the macro event risk coming up. You also still have DeepSeek in the shadows, at least for the US press, of ratcheting up all kinds of open source, not to mention Baba's Quen, but you have a lot of Chinese and Huawei's advances, which Jensen also said in the past few days. China's way ahead in AI. He's not talking them down like Trump and Besant. He's nervous about it, and for good reason. That's not only a big market for them. In fact, China is the biggest growth market. The sales in the US were flat last year. People don't take that foreign component out of it, which is why the Saudi trip was so eventful for NVIDIA, because it promises so much X, Y, and Z money that may or may not come to fruition. But AMD and NVIDIA absolutely, and other semis, but especially those two, caught a really strong bid. But the one thing that I wanted to show you was, because I just wrote about this, in fact, for NVIDIA, which is a big picture, these open source AI, China-related technologies are hurting this closed oligopolistic model. This is Jeffrey's expression. He says, basically, you've got a big problem for NVIDIA. China is using a different approach, but they are absolutely catching up on chip design, manufacturing, and the technology that supports competition, which will compress margins. So even though US investors aren't looking abroad that way, we are, and that's the danger. So there is still, I was going to show you the write-up, but it doesn't matter. You get the gist. So anyway, we'll see what their results were for Q2, which probably were pretty good. But moving forward, we're going to have, I think, some headwinds that the market is not pricing in yet.
I think so. There's competition. There's the big players have their own chips. They're working on things. So there's no question. I think the pricing, I think the margins continue to probably compress. I just think the pie is going to get a lot bigger. I feel like AI is going to be, you were asking me what I thought of AI. And so anybody who's been watching my stuff is sometimes I get excited about things, but I'm getting excited that I feel like we're on this sort of next leg of AI where you're starting to see it's almost like an options delta. It reacts very slowly at first, and then it starts to really accelerate as you get towards the strike and explode in speed. That's your gamma. And it almost feels like AI is starting to get to that point where we may see it. We've been big in the training and we've been feeding it every bit of data we can find. And to much people's chagrin, they were talking in the UK about how the guy came out and he said, I think you're just going to impede the progress of AI if we can't just take everyone's music and creativity and this and that. And all the creators are going, oh my gosh, are you kidding me? We're not going to get compensated for anything anymore. But boy, we don't want to stand in the way of AI. It's hungry for data. So give it all the data. So it's going to happen no matter what, I have a feeling. And the Saudi news is very big. I think that's very interesting because they had been probably thinking about how do we diversify away from oil and this, that. Man, they can start building some data centers and they've got all the money in the world. So
yeah, but do you trust it?
Yeah,
you trust them to follow through? That's a big if in my book, but we'll see. We'll see. Jason has a comment, and I'm not quite even sure how to, maybe you can give some more color, Jason, in your question. No, it's actually chat. A key part of NVIDIA is their software pipeline for programming their chips. It's proprietary, adds to switching costs.
100%. And I was going to mention that. That's amazing, Jason, you mentioned that, because I think their secret weapon that nobody ever talks about is CUDA. And they're not just a hardware company. They're a software company in so much as it all becomes a bit of an ecosystem. So developers, because NVIDIA has such a big head start in a way at that high level, so many developers have written for CUDA. And you're 100% right. It becomes difficult. It's like Microsoft. That's probably half the reason Microsoft has come back so strongly, is that they are really in all the right places. Why? Because they have an ecosystem that it's not a barrier to entry, it's a barrier to leaving. Who's gonna get rid of Excel? Who's gonna get rid of all these things? They are stuck in there, and now Microsoft can load on AI, which isn't a noose around its neck like it is for Google, which has the innovator's dilemma. It has to actually kill a business that's making it tons of money to shift into the other. And Microsoft has Bing. I think I read today Bing's 10% of search. I'm like, that can't be right. There's no chance Bing is 10% of search. And that 10% accounts for all the times you've opened up Google and you got Bing instead, probably. But I can't imagine that amounts to 10%. But Jason's right. I think the longer NVIDIA is the leader, the longer they become the sort of Uber of chips and everyone else becomes the Lyft. Now, maybe I'm simplifying it. You made some good points, Samantha. Like, I don't think anybody's going to be necessarily loyal to an NVIDIA chip if they can get a better chip elsewhere. But that part of it, that ecosystem part, like the Microsoft really keeps people, you have that captive audience, and then it just grows and grows, right? You can never get out of Microsoft. How are you ever going to do that? So it's like your cloud drive, right? I've got Amazon Photos. How am I ever going to get rid of Amazon Photos? They've got me for life. They've got me for life. They got my kids for life and their kids. It's an incredible, profitable system that these companies have all created. But it's very much a massive AI race right now. And so Google, which owned the space for 25 years, is now terrified. You can say anything you want. They came out with this and that last week. They are terrified at what they are facing because they are now more even keel with everybody else, right? Sure, they have a great ecosystem as well and all that, but now they are competing with other really good AIs, and everybody's trying to figure this out. So
real quick to interrupt you.
Yeah, go ahead.
Trump's order, by the way, halting chip design tool sales to China, hit two companies really hard, SNPS and Cadence Design. So they're down pretty hard. They had started actually earlier. So it's interesting because I had seen them start earlier. They were down 4 or 5% before the headline came out. Now, of course, we're focused on NVIDIA. And let me just show you, we've got CEO says Blackwell AI supercomputer in production. Deos revenue 39.1, estimated 39.2. So they're not really ringing any big bells. Adjusted EPS 81 cents, estimated 93 cents. Revenue 44.1 billion, estimated 43.3 billion. So they're not really wowing anyone right now. Premium seller so far, Dream. We'll see if they get a little bit more. I need more. But anyway, that's
yeah, we need commentary. I don't
profit
think
margin, all kinds of stuff. Yep.
Yeah, I don't think anybody was expecting a blow it out of the water number in itself, but I think what people want is an indication that there's still big demand. Jensen's kind of views on where things are going. For me, it almost doesn't matter because I think it's maybe more of a second half story and a 2026 story. I think 2026 is going to be AI bananas. And so there may be some opportunities here on dips, depending on what they say.
So you have an option play on this. So I'm more, let's just call bearish. I'm much more bearish than you are into the end of the year and 2026. So that's my bent. I'll believe it when I see it type of thing. But for you have a particular option play that's going on right now.
So I don't mind, Samantha. To be perfectly honest, I'd like to see it lower because I'm not all in, and I'd like to chip away. So I'm hoping for a little bit of a sell-off because I think we do have a little bit of time before this sort of next era that I'm thinking of plays out, which I think is going to happen. But it's going to be very interesting. Like we don't really know how it's going to play out because we don't know where the disruption is, and we talk about this sometimes. Who's going to get disrupted and by how much, and then ultimately 20% of people are out of work. So I don't know. There's so
this is definitely, that's not getting priced in. William, you were right. He said there's 10-to-1 calls to puts for this Friday's 140. And can you see the pre-market right here? It's hitting 140 right here, right now.
Yeah,
so again, it's got to stick that landing, but
exactly. Those call walls and things like that, they can be effective unless the organic flow is just strong enough. So if they blew the doors off the numbers, then a call wall probably wouldn't matter that much because it's just that big a stock. I know it's all relative. That call wall is bigger than Lyft's call wall, for example, but still I think organic flows can overcome that kind of stuff. Now I've positioned myself, Samantha, so you asked, I've put myself in a kind of a finance play. I call them turbos. So I've sold a July 120 105 put spread, and I use that to finance that upside July call. And so I widen the put spread because when you do a spread, you're not going to get very much premium. So you have to stick your neck out a little bit more. So I made it a $15 put spread in order to buy some of that upside. And I didn't want to do a call spread to the upside because I wanted to keep that full convexity up there in case we really go. So I did one of those. I also, people may be surprised to hear this because I often
they will get a hit on one thing. I just saw the gross margin, big drop. It was 72, 71. It's now 61%. So they're going to get dinged on that. And by the way, I don't know why I say Q2. It's a Q1 report. Okay, go ahead.
Yeah.
All right. So we'll see if
I started to pick away at the SOXL and the SOXX just because I like NVIDIA, but I also feel like there's going to be, and I'm certainly no expert in this area, and I'm trying to do as much reading on this as possible, although I've covered this area for about 9 years now. So, but I believe that there are going to be different implications to this next leg and what's going to happen in terms of IoT and little smaller, like GPUs are generally massive, and there's going to be more edge computing and AI at the edge in your pocket, things like that. That's why I think Apple's kind of interesting. I know they've got their problems with China and all that, but I think that is going to be a big thing as this sort of broader monetization phase plays out. I think that becomes more interesting throughout this more sort of IoT world and device world. So I think there's different chip companies. Some are better at inference, some are, but I know NVIDIA is kind of good at everything. And some folks watching there, maybe put in the chat which ones are really good. Maybe like a Qualcomm, because that's their kind of wheelhouse, the small chips. But I think there's going to be opportunity maybe in all kinds of different areas. So I think that's what's going to make it really fun and exciting. There's going to be all kinds of stuff going on, and I don't think it'll just necessarily be NVIDIA, but again, quite disruptive. So we're hanging in there, eh? 138.84. Yeah, it's not doing much. You're right.
Conference call is up soon, but
Yeah,
that goes on way long. That goes on way long.
Sale. Yes. Somebody mentioned that earlier today. They said, how about selling the big strangle? And I said, yeah, probably, even though options are low. That's why this game kind of toys with you a little bit, because you're like, options are so low, maybe I should buy them. But sometimes the market is smart and it says, look, the options are low because they really need to knock it out of the park. But at the same time,
and they need to get Trump out of the way, and he is standing in the way. He has done this. He did this exactly last time, like exactly last time. In fact, I wrote a big long post. Trump is punishing NVIDIA. And it came right out before they announced just the same MO as last time.
Jensen didn't come to his inauguration. So you got to play the game a little bit. Yeah. So I was looking at.
Chris, what do you mean liquidity grabs, by the way?
Liquidity grab?
I'm not sure if you're speaking to Hans or myself, but because I study liquidity, but what do you mean? A liquidity grab, NVIDIA grab the shorts from, I'm not sure what you mean.
Standalone iPod.
And I never look at a 2-minute chart. So
yeah, and speaking of devices, this OpenAI, I don't think they've come out yet and said anything. There was some rumor of a puck of some sort, but I think it's got to be much better than that. But anyway, this amazing disruption going on. So I think tech is treacherous. I think it represents maybe as some of the most exciting things that we've seen since the internet. And I remember how exciting that was in the sort of late 90s. It was fantastic to trade. I traded a lot of long gamma, just like playing these gaps. These stocks would gap up $20, $30, and then they'd be down $50 by the end of the day. It was a trader's paradise if you played it the right way. An option seller got absolutely annihilated. So it was that kind of environment, but it was exciting. So I think there's potential for that. There are going to be some big piles of that companies are going to be stepping in. Yeah, I'm looking at NVIDIA options. They got as high as 45% of single stock option volumes in June of 2024, and they've basically petered out, and they haven't been this low in years and years. So there has been a little bit of a move away from NVIDIA as being as important. And you know what, to be honest, I've talked about that for maybe 5 months. I've said every time an earnings report has come out, I've said, they're not that important anymore. And it shows a little bit. The AI is broadened out a little bit. It's benefiting more people. And I think it will benefit all areas of the economy. I think there will be those efficiencies and productivity gains in all areas of the economy. So other than that, Samantha, I'm looking at it. Some people are like, how does this market just keep going up? I'm looking at some of these things. I know you get what's it called? The market eye? What's it called? The market
ear. Market ear. I haven't looked at it in a while, but yes, I do get it.
The market ear. I like to look at these things because I always like to have an idea of where are the flows. And it's very much been retail getting back into it and institutions not so much getting back into it. You look at consolidated equity positioning. So that's just consolidated. It just means kind of everything, right? Your systematic, your option, it's everything put into one. And we've definitely had a nice bounce back from those lows in April, but still there's really very few charts out there that I'm looking at that give me that feeling that we're overheated. This is nowhere near as bullish as it could be. The Goldman Sachs US Equity Sentiment Indicator, and tell me if you don't believe in some of these, Samantha, but this is it's not even moving. I don't even know what it's doing, but it's not even going up at all. Like
They lack the conviction until they have clarity. But we all should be thinking the same way. We the same playbook, and I just wrote about the Yellen playbook of juicing the markets with liquidity by Treasury, Fed coordinated rate cuts or pause. Right now, there's no incentive for Powell to play game with Bessent, would play in the sandbox, the same game. And there's too much tariff overhang. So there's no reason for these big money, not the 3 to 5 billion that might come in for retail because they're FOMO, but the institutions that suffer from FOMO, right? Fear of materially underperforming, that hasn't even triggered yet. So I think if we were to get a relief, remember, Qs don't usually fall before July. So June is not typically a volatile month. The reason why I said, and I keep saying, I think macro event risk comes in more toward July is because I think we need to get out of that sweet spot of FOMC, where they're not going to do anything. Bank of Japan, probably not going to do anything. End of quarter, not just June monthly expiration, but end of quarter, where then we can have a better timing, I think, for volatility to rise and for a little bit more shake and bake this summer. There's too much uncertainty around tariffs. Anyway, I can talk to the macro side of it, but what are you looking at right now? You're looking at positioning.
Well, you mentioned money supply. So here's M2 money supply. So as long as we're not cutting, what did Doge do, and what are they trying to do with the budget? That has its downside, obviously, and yields are telling us that. At the same time, I think the market can handle 4.5, 4.7, 4.8. You start getting it a little bit higher, then we start to worry about plumbing. So I think it's almost the market wants to go up. It's going to flinch negatively if we do get plumbing issues or those kinds of problems. But you've got this sort of money supply, you've got more.
Let me show you before you go on to the next one, because you're talking money supply. This is my version and my interpretation. This mantra that I know is popular is not mine. I am not consensus on this. Surprise. Anyway, this money market funds, total financial assets, does not mean it's money on the sidelines ready to come in. No and no. But this is my write-up. This is not cash on the sidelines ready to buy stocks. They already have. So it's liquidity in general as the market and the economy grows over time. So the only other thing I want to say about this is not money that goes into the stock market. Again, they already have. This is really also an outlier that can revert with velocity. And we haven't seen that. We haven't had a macro trigger to interrupt the bullish economic and market flows. So that we did here, right? We did back here in 2000, and we did again the great financial crisis. And then we've had massive fiscal spending, stimulus, monetary easing, and so on and so forth, not just US, globally. But this is money market funds is not about money coming into the market, and everybody thinks that's bullish. It already has. That's all I want to say. That is my soapbox, and I'm standing on it.
They think it's money. They think it's 7 trillion waiting to come in the market. Now, I don't know about that either. Yeah. I mean, I don't know. Maybe there's some of that, but I suspect that as the population sort of ages, I know there are people out there going, wow, I can actually make a bit of money in my GICs or my, whatever, the high interest savings accounts, things like that. I'm saying GICs. You guys are like, what the heck is that? So what is the term deposit? You can make some money with money sitting there. So
yeah, and that's what has helped, by the way, this inflationary asset that is the market. My goodness, the house too. Money is making money right now. Even Exxon, tons of money interest that they earn on their cash, which is why we've had this, again, robust backdrop. But that's not a reason for what we're talking about with policy intervention coming in to backstop the market on April 9th, and then follow through intervention by Bessent, and then even Bank of Japan. Actually, the MOF said, okay, we did a survey. Maybe we need to tweak the composition of the longer duration 30, 40-year bond. And by the way, this is what it looks like, which is very important because I don't think people are so focused on this real quick. This is the kind of stuff that's intervention. And this is what backstops the equity market in a New York minute. So the trend is obviously up and to the right. This is the 30-year Japanese government bond. And then Sunday night, they announced, hey, guess what? We did a survey. Maybe we should tweak the composition. And immediately, US and Japanese yields dumped. And what happened? Equities got supported. So there's lots of ways to intervene verbally and then mechanically, price insensitive buyers and sellers. And then we also have the promise of more easing, like with Treasury Secretary Bessent, last week coming in and saying, yes, I can see a situation where this summer we're gonna release some of the requirements for SLR for banks, and then in Q3 we're really going to get going with the deregulation, and then we're really likely going to issue more short duration liquidity infusing T-bills to fund this ever exploding deficit versus longer duration liquidity sucking notes and bonds. We have all this policy intervention that is spoken, and then we've got Trump. Who's not going to want to be called a taco.
No, it does not. What was that again? What was it? Trump always
Chickens out.
Chickens out. Sorry.
Something like that. So
right.
he's what that means. But in any case, for right now, we have got a big backdrop of still very sticky inflation and rising yields, and they're going to do their darndest to bring up the demand through stable coins and all kinds of other trickery. But mostly, it's still an issue where they have too much supply. So yields are still very buoyant. I think they're still going to be in it to win it, and we probably will have a much different backdrop toward the end of the year, and that's going to interrupt the growth profile.
So what do you think, Samantha? Like, some people are calling for, I've seen some people say no cuts until next year. Some people are saying maybe
I think September.
Yeah. So that's something that the market's going to latch onto at some point. We get a few more deals. We get a little bit of a sniff that rates are going to come down. That can be positive, right? The market's always looking for just that little speck of positivity to kind of latch onto. And then you've got these things like, here's U.S. fundamental long short. I can hardly believe this, but it hasn't been a great chart for years now. You've got the CTA, overall equity allocation. We know vol targeting is still very low. Remember, those are the ones that allocate. They haven't really had a chance to get back in the market. We had such a V bounce that the realized volatility, which just means actual market movement, stayed high for a very long time. So these funds are watching the market go up 1,000 points.
But it's crashed by now. They should be all excited.
Now, and they've allocated a little, so the 1 month have allocated now. The 3 months are waiting for that 3 month realized.
I still think they're gun shy. After the dollar-yen carry trade of last year, we have not had the same quantity of VIX suppression. And then, of course, with the mercurial nature of Trump coming in on again, off again, it's also very difficult to be large with conviction, but still playing the game. They're definitely.
He's toying with everyone, right? We talked about it last week. The 𝐸'S of the world, like they're adjusting their targets. It's like it's chess pieces on a board, like just moving them around. They don't know where to put anything. And so I think whenever you get like a few days of calm, you see the markets rally because they breathe a sigh of relief and go, oh, maybe the coast is clear to stick our necks out a little bit. CTAs remaining underweight here. So we had a question earlier. I wanted to ask you, Samantha. Somebody says, I'm confused about BXM.
What about it?
It hasn't been, it was TM.
Yeah, it's broken.
It's not been feeling it.
It is definitely busted. It has been a phenomenal, so BXM, the buy right monthly index that I happen to show every day in my trading room. So it's one that I use, and it's supposed to mirror the S&P, but it really is not lately. And it has broken very much like SVXY broke during the, let me just show you what I mean by that.
Sure.
All right, I'm going to show you something, and it's ugly, but just trust me, okay? Because I'm answering his question because he is knowledgeable about this, and for others, it's going to be like, what witchcraft are you using? But let me just show you.
You're going to show the BXM?
First, I'm going to show you SVXY. So SVXY is the inverse of VIX, loosely defined. It's really not, but you know what it is. But my point is, it had been a great tell for direction of the market until we had VIX blow out to 65 that Monday morning on August 5th, and SVXY has not recovered. So it had been absolutely tracking SPX beautifully on this whole rotation until it broke. Okay, that's number one. So now you go to the next publicly, it's in your charting software, BXM, which is the CBOE buy right monthly. And if you track it with SPX, you can see it has stayed beautifully in trend. By the way, it did not blow out back on August 5th. It got defended, that convexity short covering rally, and it got right back above in trend. What he's referring to is the same thing that happened with SVXY back in August of 2024 has now happened with BXM in February to April 2025. And yes, I'm completely aware of that. And that makes it very frustrating because you want to find a new indicator and you can't. There aren't so many that are readily available that mirror the SPY so well from an option standpoint. Anyway, long story short, I had expected this H pattern, which was one of the reasons that I was able to come up with my 48.78 price target for anybody who might remember down here, right? This was like the same H pattern into 48.78. So BXM is a great little tool, for lack of a better word, but it's done nothing but go sideways. And then yesterday, before I go to yesterday, on Friday, I had noticed that, oh my goodness, we're really losing BXM, which is typically, like I said, it's got a correlation with SPY, so it bears watching. But then I also said there's a caveat. This could be a snapback, a ricochet rabbit, where we're getting into a Bollinger Band squeeze, which is technical parlay for. This could be an elastic band, or it could open up and the Bollinger Band is going to not explode, but expand, and this thing is going to go retest some of these lows. Because you know what happens when you have a Bollinger Band, for those who are into the technical side. I'm just going to show you. Look how tight this is getting. We're going to have a big move coming up soon. But this is broken. So the point is, yes, it is very frustrating. In the same way that SVXY died an ugly death for the yen carry trade, BXM died an ugly death for the basically the Trump tariff terror. And now we're waiting for it to make a decision. If it gets back above the 200, it's very bullish. And if it doesn't, it's bearish or useless. One of the two.
Now, what you've got to remember, folks, is that it's a buy rate index, right? So it's basically, it sells at the money options. The BXY, which is sell out of the money options. So it tends to do better in a bull market. So the problem is these kinds of products, just like you may have experienced on your own, it's not the product's fault, but we had a very strong rally. I don't know, we were up in 1 month, but it was massive. So whenever you if your timing is wrong on the writing of the calls, you can end up really capping your performance. And so it's a little different. The SPXY is going to reflect a change in the structure of the VIX futures, right? So right now, if we stay calm, SPXY and SVIX have that tailwind behind them, because we have that nice contango and we have that beautiful roll yield that is going to benefit those products. It hurts the VXX and the other ones. The BXM, what happens is, and I've experienced this because I ran many of these cover call funds, and you get this big sell-off, and then it comes time to roll your calls into the next month, and you're like, oh, damn, I don't want to roll these now, because what if the market rallies back? And so it has no choice. It isn't an active strategy. It just does what it does. I can't remember what it probably goes to expiry. So if you were to look at the chart, I'll bet you the market probably had a good rally after a couple of expiries, after April expiry, and it's going to cap that upside. So it literally just gains the small amount of premium on the way down. Then maybe it sold $5 of premium, and then on the way up, it gives up $30 of upside because it's capped its upside. So it's these strategies, just like anybody who's done cover calls understands, these are very path dependent. There's a little bit of luck involved. You don't want to, if you sell those calls, even though volatility is high. One example that I give when I teach people, I go, listen, I want to show you the JPM caller after COVID. Volatility was very high. So don't think that just because the VIX is relatively high that you're getting so much premium that you're cushioned for a good deal of the upside. It lost on something like 6 or 7 of the 8 quarters, because the market had 7 or 8 quarters, very strong quarters. The market went up like 80% or something, if I remember correctly. And it gave up a lot of that performance. Even though it was selling calls at a VIX 20 something, the market move was too strong, and it kept giving up. That's called benchmark risk, right? Like, how is my cover call doing versus if I just held the market? That's what you're seeing with BXM. You're seeing that the market far outperformed the capped performance on the BXM. So they can be tricky when you get a lot of volatility, for sure. And people have this idea that volatility is high, the VIX is 25, 30, and I'll be fine. But it's hard to contain an exceptionally strong run, which is what we had there. It was a V. People were expecting a W or something, and we got a very strong run.
We had the policy intervention. So for me, that's always the biggest trigger. In other words, it trumps anything going on with options market. And we actually talked about that a few months ago when this kind of started. We're like, listen, this is macro driven headlines. So we're going to have to wait for a macro trigger that's bullish or bearish, and we got a bullish one of strength on that fateful April 9th, and the rest, as they say, is history. But which is so interesting to me is Besant promised they would not do policy intervention. Who cares what happens to the market? We can't follow the Yellen playbook. We can't keep saving. We can't keep spending money. We can't keep financing this with short duration T-bills. On and on. He talked about how we just have to let the chips fall and clean this mess up. And then what they do? Intervene, get their buddies to intervene, more intervention. Like, it's been nonstop intervention since literally the bond market and credit markets froze before going over the cliff, and they came in on April 9th. They brought it there. It wasn't over. China's de-escalating. No. US escalated, then they de-escalated, and that's why Trump is getting called the taco.
Right. Look, it's for good reason.
Anyway, but we have to trade this stuff. So basically, and I said it today, I said, using that kind of the hockey metaphor, right? We just don't have a lot of good shots to go after right now. I feel like the Bulls, they've got the goals, they've scored the most, and now they're running down the clock. They don't want to give the other team a chance to score. And one of the end games here was NVIDIA earnings, and the other one's going to be month end. So are you expecting any changes right into the end of the month because of rebalancing, Hans?
I haven't looked at it, to be honest, Samantha, but I don't expect any big fireworks around that. I think NVIDIA out of the way here gives us a bit of cover, probably to drift a little bit. I wouldn't be surprised if we see the VIX kind of come in a little bit. We weren't pricing a ton into NVIDIA, but there was a little bit in the S&P, and there certainly was just a little. NVIDIA was low, but there was a little bit of premium in there. So we'll probably see that come out, barring any. There's still time for this to go wrong or go better. So I still maintain that I think we kind of drift towards that 6,000 level, and I'm just going to keep playing some of these. I think the market's expensive, right? So the market is now having to battle. The easy money's been made. We had the big bounce back. We had the flinches. We came back from the brink, and so here we are. It's not over. 20% tariffs are still not insignificant to the market, to reality. But I do think that the markets always have this amazing ability to go, okay, what's next? Okay, we've absorbed this and we've survived it. So what's next? Okay, maybe we'll get some cuts towards the end of the year. Okay, what's AI going to do for us? Is that going to do some good things for us? So
good, bad, or really bad?
Bad, or whatever. Is Trump going to have trouble getting his tax cuts extended? Right?
Yeah,
and now we don't care what we're spending. So that remains still a big problem, I'm sure.
Actually, that's a macro event risk that he does not get this passed. And it's not just Memorial Day weekend has passed, but he's getting some strong pushback. Of course, he's got levers to pull politically, no question about it, but it's still a macro event risk. Just real quick, I have to show this because I was looking for it while you were talking, and it's to close that conversation about the BXM and why I use it. As he brought it up. This is an example, by the way. I use a MACD over here, but this is part of my intermarket analysis. So I review it every week, and I do upload it, new reads on it. And basically, this was on right after the gap that we had on May 12th, which was Monday. Very similar to the gap we just had Tuesday. But anyway, the point is, SPY was going straight up hockey stick. Oh my God, I'm so in the mode. Anyway.
Sure. The Oilers are still in it, Samantha. I know you don't care. We're excited. Connor McDavid is fantastic.
Anyway, so this little pop-up here has held, but BXM, just to get to your point, TM, really got tapped down below also the 50 and 200. So you can really see where this V shape in BXM stalled and price action has moved higher, and it hasn't really turned bullish. Long story short, even today, right? I'm talking even a week and 2 weeks later, it still hasn't gotten up and moved higher, which would be that conviction that I have that markets are really in repair. I know that's not how to use it, as Hans just defined what it is, but that's how I use it. Also, some other things I'm still looking for, and I know I've shown this chart before, but speaking of NASDAQ, we do have this is NASDAQ composite. This is the credit spreads, the high yield OAS. We popped up 200 basis points, which I warned about. I actually nailed that from February into April. And now we have pulled back, but we have not broken back inside. So that's why I'm also giving July that swag of be careful. I don't think the Qs are going to fall apart in June. It's not really historical. And we don't usually have a lot of drama, but we've got Trump tariffs following through potentially in mid-July and mid-August. So I am looking at this as a potential right shoulder of this head and shoulders pattern. And I see them everywhere. I see them in financials. I see them in NASDAQ. It's ridiculous. Anyway, I'm still working out the problem of seeing lots of rejection zones, but we have to get there first. And we're not even there yet. So we haven't even made it to 6,000, let alone 60.44 or 61.50, which is really an upside. So we got to get there. And in the meantime, the sector rotation question, too much of bullish sector rotation in speculative assets. So I even wrote about that the past few days. While we're running the clock into NVIDIA earnings and end of month, we still have nuclear, uranium, and data center moves like your CCJ, my CCJ for years. It is all-time highs. No, not all-time highs, because actually there was 2007. Maybe it is all-time highs. Anyway, the point is
we're matching the highs of December is when we had the run. So we're about the same in CCJ as December. VST got maybe a little bit higher. Those are a couple of names I like. GEV, GE Vernova.
Correct. So all the nuclear, but that's policy driven, the uranium, that the macro trend trade for a few years for clients, data centers, but also the power producers, the semis on the news of just expecting great things from Saudi and such investments, the space trades, the air taxis, drones. Bitcoin is petering out, but all the kind of Bitcoin crypto treasury companies that are basically would be nothing like a GameStop, but now they're buying Bitcoin to put on their balance sheet to make them contenders. I think that's the laziest form of trading there possibly is, let alone running a company, but it does work. If you're speculative and you're chasing on any of that stuff. It's kind of like chasing when NVIDIA it invests in a company all of a sudden, whatever, NVTS of late, and it hot fire flames, but then it peters out. So there's something that says, sure, it's a good chase, but is it really a solid investment thesis? It's no better than trading fart coin.
What do you think? Don't you think, I guess you've got to be on board with the sort of endless AI theme, but I think power, I just don't think there's enough power. There's already evidence that some cities with data centers around them are getting these glitches, these power transmission issues. So there's just no question. And I was watching something from, who was the CEO of Google before, Schmidt, and he was saying there's not going to be enough power, right? There's just not going to be enough. And so I think that is the theme.
Unless you're in China and they've got plenty of solar and alternative energy sources that they're right now maximizing also through battery inventions and fusion and energy. So actually they're making up for their being behind in chip design and manufacturing with their power innovations. And they're going to quickly catch up with the design and manufacturing. We might have some issues here, but then you've got Tether coming out, and I'm not a fan, but I'm going to tell you anyway because it's interesting here. Like you're just talking about energy, right? So when will NVIDIA and AI ecosystem take a big write down? I know that the mantra is we need energy, we need data providers and centers and blah, blah, blah. They're coming out with decentralized AI could disrupt big tech's dominance by embedding intelligence into the fabric of user devices, creating a scalable, privacy-focused ecosystem. So this would basically reduce the demand for data centers, challenging the centralized AI models of tech giants like Google, Amazon, and OpenAI. Now, this I sent over to Jeffrey going, hey, what do you think? It's open source development, and it's basically making it viable to run these things yourself. And he wrote back, they're already doing this in China, and they already have the energy models built up in China. And this is already, they're way ahead of it, basically. And this is why it's very tough to go with. It's a great swing trade. You can see the momentum, but they're still way early in having these quantum or data power producers or any of that stuff. They're themes, they're great themes, and they've been working fabulously, but ultimately some of them are going to go by the wayside because they're going to come up with something very different in this AI ecosystem. It's way early. They're figuring all this stuff out. So I wouldn't marry it, is my long story short.
I like that. No, you know what? That's fair. That's fair. Milk it for what you can. Somebody was asking about PLTW. I don't know which one's that. I know MSTY is this, I guess it's like a covered call MSTR. So William's asking about that. I'd say, William, that I don't mind those when the option pricing gets a little bit juicy. Right now, I think, if you've been watching the show, it's been low, right? And so I remember having this argument with somebody saying, no, don't do covered calls on MSTR right now. And it went from 300 to 450 in a hurry. And I don't know why exactly. It coin rallied a bit, but the options were just too low. So just look at the pricing. If you're trading at, like, I don't want to be in that kind of product if I'm going to give away a lot of upside, which is what they do, a little bit like what we were talking about earlier. If you're not getting very much for your options, then there's always a chance that occurs just at the same time that something's rallying, right? So when the SPY is rallying, the VIX is coming down. So you're actually getting less and less for selling that upside, which a few weeks ago we talked about. That upside, remember, those out of the money calls are very supply driven, right? So supply comes in, everyone's selling calls, everyone's compressing. They're trying to do exactly what MSTY is doing. That whole industry is 100 times bigger than it used to be 20 years ago. So there's a lot of supply of options as we go up. And so that's why as the market moves its way up to 600, we'll see it start to walk through mud a little bit, because you'll get a lot of sellers of options. The dealers are going to take it on, and that's going to create all this nice, juicy, positive gamma, which we sometimes call that nice, positive cradle of gamma, that loving cradle that lowers volatility. So that's what happens with these products. So they can give away a fair bit of upside, like a VXM, if you get a stock that really moves. So I don't love it. I think for me personally, and everyone's got their own kind of view, like they love income, so they just don't want to own anything without some income slant to it. But if I want to own MSTR, I don't want to give up the upside. I already own something that's crazy volatile. Why would I want to take all the downside and give up the upside? That equation doesn't make sense to me. So you want to be selective where you do things like cover calls. You don't want to do it in things where you own the darn thing for that explosive upside because you think MSTR is going to go to 1,000. And if that's the case, then why would you want to cap that upside? So, and I get it, the options are expensive and you look at those yields and they lure you away. But do me a favor, look at these things and compare them to the underlyings without the cover call layer on them. And you may rethink wanting to do many of these because some of those charts are absolutely not pretty. You think you're getting a lot, but you're actually giving up a lot as well.
Last thing, because I know William also wants to know about Palantir. Are you trading Palantir? I know that they had lots of insiders selling this week, which doesn't matter. If it's still a cult stock, it's going to do really well. And then the next question is on NVIDIA. I wanted to show one chart because we have after hours underway. And this is just to remind that this is the aftermarket. We're already pushing up 142 and change. Must have a conference call underway or soon. I've got a weekly here just to show you that right now, if I was to put this on this weekly view, you can see that we're holding above this 141 area pretty darn well.
It's pushing the straddle, Samantha. It's pushing that straddle. What was it, $9?
Oh, no, the straddle is at 146.
Oh, is it? Okay.
Yeah,
well,
130, it would have to go all the way up to 146 for that, for a directional to really make sense, if I remember correctly. But my point in showing this is one of the things I see everywhere is this head and shoulders, right? Left shoulder, head, right shoulder. I'm on a weekly so that you don't see it as much on the daily. You just see the fact that we went from 96 to 136 and now we're clearly pushing above. But this is where I'm looking for this kind of digestion. If we get this digestion, I would not be at all surprised. So my question is, if anyone is directionally long, do you ever recommend shorting the stock up here to lock in any of their directional gains after hours or not? Do you ever do that?
Oh, that's a great question. As a market maker, I would
before it comes back down, in other words.
Yeah, and it depends on the circumstances. So I've done little lessons for people on when they own something. Let's say they own the 140, 135 calls in NVIDIA, and you paid $2 for them, and now the thing's trading at 142. Absolutely. That's where I would look at it and go, and sometimes you make a mistake. You'll wake up in the morning and go, damn, I shouldn't have sold stock because now it's at 148. But you have this option, right? So if I bought that 135 or let's say I bought the 136 for $2, my cost is 138. Now it's trading at 142. 100% you can sell stock short against that. You need the right kind of account and money and all that stuff, but you can sell short against that. Now you've locked that in. You have, there's no, for every one call you own, you can sell 100 shares. That's Jason's. Wow, that's great.
I love that. I love that tactic, by the way. That's why I'm bringing it up, because if you don't trust that, I don't trust that NVIDIA is going to stay up there.
And what I really like about it, Samantha, is I remember somebody who said, oh yeah, this happened after hours and I sold stock against it and I exercised the calls, and I went, oh my gosh, why did you exercise those calls? So this is maybe a longer conversation. It's 5:04, but when you sell that stock against those 136 calls, you've now created a synthetic put. You've got a free shot to the downside. What if Jensen comes out and goes, oh man, we things aren't looking that good. The thing goes to 126. Guess what you can do? You can buy back that stock you sold at 142, which you couldn't do if you exercised your call. So don't give up that synthetic put if you don't have to. Now, if they expire today, then you got to do what you got to do at 5 o'clock. But if you have some time, you want to play that position back and forth. That was one of my favorite things as a market maker. You just play back and forth through the strike. It's called gamma scalping. So 100% you can absolutely do that. Cool. I want to recommend it. You got to know what you're doing. You got to know what you're doing.
Right. Yeah, but it's also margin too. Depends on how much you have for those directional calls that you actually have to sell stock short against. Okay, we can discuss more next time. We've made it through NVIDIA earnings, and we'll let the chips fall where they may. And then we will get into next Wednesday, the month end, and the run into FOMC, CPI, Bank of Japan, the summer, and definitely sector rotation, because right now there isn't a new one for me. Like, I'm looking all the live long day, and there's nothing but the speculative quantum space, AI. It's still Bitcoin, crypto, it's still speculation. And that's all there is to say about that. So I wish you all a great evening. Thank you so much, Hans. Thank you everyone for attending.
Thanks, Samantha.
And good luck with your end of week trades. Cheers.
Subscribe to 𝐬𝐿Duke Trading YouTube channel for more macro to micro options power hour and other content.